Confluence trading. So now confluence trading is just the application of all we've been taught since the very beginning. Do you understand? So
Of
this is all
course.
we've been taught from the very, very beginning. So if you understand your market structure, understand your minor and major zones, understand breakout of zones, understand 200 moving average, understand your relative strength index, understand your Fibonacci, then confluence trading is just a revision of everything. Because what is confluence trading? Confluence trading is simply looking for more than one reasons to take a trade. Looking for more than one reasons to take a trade. And I want to believe since the very first day we started the lecture, I've been putting like since the very first day we started um this class, I've been saying everything I teach, you guys shouldn't use it in isolation. You should use it together with conferences, other conferences, so that you can have low risk trade. Because the aim of this thing is minimize your risk and maximize your profit. It is very, very important to take note of this. The aim is to minimize your risk and maximize your profit. That's why a whole lot of advanced professional traders, they trade the 1 minute time frame. They always trade the 1 minute time frame. Now let me say something. Okay, let me just let me not talk about it now. We'll talk about it in the mentorship class. But don't forget the most important thing is
Don't skip it now. Talk about it. Don't skip it. Talk about it. Don't skip it. Talk
okay.
about it.
Now what I want to talk about is just time fractal. Time fractal. And it's something about market structure. So the reason I don't want to talk about it is because I want you guys to watch the first class video we spoke on market structure. Because if I talk about this now, it might kind of confuse what I thought. You understand? Because retail trading and institutional trading, they are very, very different. Because what I want to talk about now in institutional terms, institutional trading. So and the thing is, if we don't absorb retail trading very well, institutional trading will conflict with it because it will go against most of the things you believe. Or you not really need to go against it, you just expound on it the more. Because honestly, all these lines you are seeing on the charts, they look like lines though, but they're not just lines. They tell us stories, they tell us events, tell us things that are happening. So, but let me just say it's passing by though. So now market structure, like now this is an uptrend. So let's assume this is a daily time frame or a monthly time frame. In between that daily time frame, we know that this is an impulsive move, a corrective move, an impulsive move, a corrective move, an impulsive move, a corrective move. And I always tell you guys something that a corrective move on a higher time frame will form a channel on the lower time frame. So anytime there's a breakout of that channel, just know that it has ended the impulsive move, the corrective move rather, and it is about to resume its impulsive move. That is one thing you should know. That thing I even told you guys about channels being a corrective move is also an industrial term, but I just needed to say it there. So don't forget, every time there's an higher time frame, a corrective move on an higher time frame forms a chart channel on a lower time frame. And anytime there's a breakout of that channel, just know that the market is about to resume in its impulsive uptrend move or downtrend move. That's why it's always good to analyze the daily time frame market movement. So if you know the daily time frame market movement, and you notice that okay, on the daily time frame, the market is currently retracing. Just so that on the lower time frame, that retracement is a chart channel, is a channel, or it will be ranging or consolidating. Just mark those zones out. So anytime is a breakout of it, just another breakout. Look at this. Look at this. Now look at this big one. The first one I drew is daily time frame. This smaller one I just did now is the 4 hour time frame. And if I zoom it and draw another one again, the one I'm drawing in between the 4 hours time frame will be the 1 hour time frame. Look at it. So why am I doing this? I'm trying to show you guys that every time frame has its own market structure. It's very important you guys should take note of this. Every time frame has its own market structure. But the overall market structure is the daily time frame, the weekly or the monthly. So just focus on the daily because going back to a weekly and monthly, it's kind of too back. It's like going way too back. It's like going back, sha. But just stick with the daily. Just now, whatever goes on in the 4 hour time frame is just responding on the daily time frame. You get the daily time frame is the major um trend you should follow. If the daily time frame is an uptrend, you that the market is in an uptrend. But it won't just go up, like I always tell you, it moves in impulse corrective, impulse corrective. And a corrective move on a higher time frame is a channel. Now look at this. On a this one line you are seeing, this one impulsive move on a daily time frame is is a series of higher lows and higher lows and higher highs on a 4 hour time frame. And that series of higher highs, higher lows on a 4 hour time frame, that one impulsive move on a 4 hour time frame is a series of higher high, higher low, higher high, higher low on a 1 hour time frame. And that impulsive move on a 1 hour time frame is a series of higher high, higher low, higher low, higher high, higher low on 30 minutes time frame. And that impulsive move on 30 minutes time frame is a series of higher high, higher low, higher high, higher low, higher high, higher low. And that one on 15 minutes time frame, that impulsive move on 15 minutes time frame is a 5 minutes time frame higher high, higher low. But in total, it's just forming higher low within this impulsive move. But yet it's still going according to the impulsive move. Do you understand? But it's forming a different structure. But still, it's working in alliance with the daily time frame move. But still, it's forming different structure to get there. Do you understand? So if you understand, say yes.
Oh yes.
Yeah. Yeah, on it. Yeah,
Yes.
yeah.
So yes. So that is it about market structure. So it's always important to understand market structure. So the reason why I said it was because there was something me and Mr. Tosin were analyzing. We were analyzing each Euro JPY today, me and Mr. Tosin, Mr. Toyin rather, sorry. So we spoke towards market structure. So I needed to just clarify this so that we can understand that every time frame has its own market structure, and the same principle applies to every time frame market structure. Do you understand? But it's always good to analyze the daily time frame, the 4 hour time frame, and the 1 hour time frame before moving to the lower time frame. But yet, every time frame has its market structure, and they obey the same principles. Do you understand? That's what I'm saying. Once you know how to analyze the market, different time frames, and still respect the major time frame, you will not miss out. You always come out with more moves. You have more reasons to trust a move on a lower time frame. It's very, very important. So that was just a little digression from the topic of today. My topic of today is confluence trading. That means having more than one reason to take a trade. Now like I always say, the first thing we consider is mark out the zones. So let's assume right here, this is the demand zone, or as support, as most people like to call it, but demand zone. So, and in the demand zone, we know that anytime there's a bullish move towards a bearish move close to the demand zone, we always notice a rejection. We always notice a candlestick rejection. Like I always tell you, anytime it is getting to the demand zone, you'll be noticing rejection, meaning at that point, buyers are there. Buyers are at that demand zone, and buyers' presence are stronger there. So showing you rejection. So you notice candlestick rejection like this, showing that that zone is respected, showing you candlestick rejection like this. Then after this, you should expect a bullish move to the upside. So yes, definitely after seeing this bullish move, it is right to wait for a confirmation, right? So this bullish move is a confirmation that sellers are actually losing control. So after this confirmation, it is right to enter the market, right? So now if someone is entering the market based on this reason alone, he's not a confluence trader. He's just making a guess. Now, even though he's seeing rejection, even though he has seen the confirmation of a bullish move. What if it's a bullish move that just went off like this? Then suddenly there's just another bearish move, and a possible bearish move that just come to take him out. Boom. And the market begins to move down. Do you understand? Things like this happen. That's why it is always good to be a confluence trader. It's always good to be a confluence trader. Now, if this kind of move happens and somebody makes the move based on rejection alone, And based on the fact that okay, it's a major zone, the same rejection and it's on a major zone, and it makes a move based on this. It is called a guessing game. Now, even though he has made a move based on the major zone, it is still not a confluence trading. It's a high probability game. That's why we take high probability game, high probability, that is confluence. Now, assuming at the same major zone, um, okay, let me use this call. Let's assume at this same major zone, the 200 EMA is there. At this same major zone, the candle is close to the 200 EMA. That means the 200 EMA right now is uh serving as support
Distance.
because do you understand? Serving as support. So right now,
Yeah.
there are two major reasons now to take a trade. That means number one, the first reason is respecting the 200 EMA. One, two, is also at a major support zone, meaning these are two reasons why you should take a trade. And definitely, if you take a trade based on these two reasons, trust me, you will make more profit. The market will 80% go in your direction if you make a trade based on these confluences. That's why we are confluence traders. We don't just take move alone. We take it based on several reasons. So now, okay, let's say the market was actually let's say the market was actually coming from a down from a upside. Now, let's say the market was coming from the downside. Let's say the market has been buying. Let's say the market has been buying. You mean that okay, market came here. This place was formerly the resistance, rather. Let's say this was the resistance before. Let me do it like this. Let's say this was the resistance before, and suddenly the next bullish move just broke it like this. Definitely, we know okay, this is a break of structure. That means this resistance here has been broken because there was no okay, there was rejection like this. Okay. Let's assume there was a rejection like this. Rejection from the resistance. You're now waiting for your confirmation to see it to be a bearish move. So they just see a big bullish move that broke it impulsively like this. Just like okay, now there's a break of structure. That means you wait for your retest, right? So you wait for your retest. After a retest, you move in. So at the end of the retest, definitely you notice rejection at the retest, and you will see a bearish confirmation. Just know that okay, yes, this is a high probability risk. Now, before you even take your now, don't just because it is retesting alone, you just move. No, going on a retest alone is not a good reason alone. You take out of Fibonacci. Please always remember this. You take out of Fibonacci. Let's ask okay, let me put a week here. You take out of Fibonacci like this. You draw out of Fibonacci like this. Now let's say there's a week here too. You take out of Fibonacci from the upswing. Now look at it. That place of retest is the 50 fib level. And like I said, anytime it gets to the 50 fib level, it is stronger. Anytime it like the TV fib level that are highly respected is the 38.2, the 50, and 61.8. Now it's not that these other ones are useless, but I'm sure by backtest as you have been backtesting, you notice that these three ones are the most important fib level that the market often respects. So if you notice that okay, it gets to one of these fib level 50, number one, Fibonacci is telling you that okay, it has retraced to a major level, and at that retracement level, you are seeing rejections. One, two. Number two, that place that is rejecting to is a major resistance now turned support. That is second reason. Third reason, rejections. Number four reason, you are seeing what are they calling it? 200 EMA there, and 200 EMA is telling you to buy. Ah, please, this is what we call confluence trading. Taking a trade more than one reasons, and you are seeing candlestick confirmation here. Now this two now is a that's from a candlestick pattern. Number one, this is what we call hammer at a zone. Number two, this is what we call bearish and bullish engulfing. And number three, this is also a morning star formation, which is a morning star formation, an hammer, and a bullish engulfing. These three candlestick form the morning star. This middle one formed hammer, and this last one formed bear, bullish, engulfing. Just know that these are many conferences, many reasons why it will buy. Do you understand? Like now, don't forget, please remember this: the last confirmation should always be your candlestick. The last confirmation should always be your candlestick. Candlestick confirmation should always be the last. So this, my people, is how you make. This is an example of confluence trading. This is confluence trading. This, my people, is confluence trading. So now, these are the things like these are the parameters rather I put in place before taking a trade. I don't just take a trade based on a reason. I take a trade based on several reasons. And if you take a trade based on several reasons, please trust me, that trade will be profitable. So that's why if you see a trade based on one reason, sometimes it's advisable to just wait for it to reach your area of interest. That is your point of interest. When it gets to that point of interest, trust me, you see several reasons why you should take that trade. If it doesn't get to your point of interest and you just see a candlestick formation, don't mind the candlestick formation. It might just be a false breakout, might be a whipsaw, a false breakout, or a false indication that there will be a buy or sell there. So now, I want to show you guys in
Sorry,
the chat.
sorry.
Hello? Yes,
Hello?
I'm listening.
Yeah. With all this we've said now, can we consider fundamental alongside with it as well? Or we should disregard it?
Yes. Speaking of fundamentals, yes. Now, let me show you something. Let me show you guys something. Let me show you guys something. Now, this is investing.com. As you guys can see, it's investing.com. This is investing.com. So this is one of the places I get my fundamental news. So when you open your investing.com, just come to economic calendars. Click on economic calendar. So when you get to economic calendars, to show you, you come here, set your time frame to +1 West Central Africa. Now it will show you the events, major events happening. Look at it. These are the major news events that affect the market. Do you understand? So now if you click on this site alone to show you many news, but to notice the news that actually move the market, that affect the market, you click on economic calendars and to show you, look at it. Now, one star shows you that okay, the news is not a volatile news, it's not a strong news, it might affect the market or not. Two star shows that okay, it's a strong news. One star shows it's a weak news. Two stars shows it's a strong news. And three stars show that it's a news you should put into consideration. Look at this. Now, look at this actual forecast and previous. Now, previous shows you like now this is the CPI, Consumer Price Index. But let us know this is JPY's Consumer Price Index. That's what CPI means, Consumer Price Index. That is the amount consumers are paying to purchase the goods. Now, if they're spending more money to buy something, it shows you that there's an inflation in the system. There's an inflation in society. And inflation shows you weaker currency. Now look at this now. This is a previous uh, CPI figure. It was minus 0.3. Now the forecast is saying that okay, it is minus 0.2, minus 0.2, meaning the actual is 0 minus 0.2, showing you that okay, less people are, I mean, there are less people are not using as much money to buy product. That means it's minus, that means it's minimum. So now this actual is a good thing. That's why it's green. It's a good thing. I mean, that's positive influence in the market. It's a good thing. For any situation, actual can be good. If actual is lower than forecast in this situation, it's a good thing. But in the issue of core retail sales like this, let me look for that one. Now, retail sales like this, look at retail sales last year. Retail sales, that means you don't know what retail means now. Retail is the final point where consumers get product. That means if there are more retail sales in the product in the market, it means the economy is actually good. Retailers are actually making money. So if retailers are making money, that means wholesalers are making money and producers are actually making money. Now look at it. The previous one is minus 8.2. The forecast is 2.1. So if the actual in this situation is greater than the forecast, that is good. But if the actual is lower than the forecast, that is bad. Now look at GPP USD. The news came out around 8 p.m. And look at it. GPP started going up. The news came out and GBP started going up. Started going up. Ever since then, GBP has been going up. That means it's a positive news. And besides, I knew it was going to go up because if you guys can remember this line that I drew, this spring, I told you that to get to this point and to go up. Now, let me show you guys something again. So now fundamentals. Fundamentals is kind of large. What I'm just saying is just the preamble. I'm giving you guys preamble into fundamentals. Just you must know something. Anytime you go to a news like this, like investing.com or for, I'll also click on the other one, Forex Factory. Anytime the actual is greater than the forecast, most times it is good for the economy. But if actual is lower than
So it
forecast,
means we should
so that
buy.
is bad. Yes.
Sorry.
Hello?
Okay. We
So
should
take
consider the
note.
currency.
Yes, take note of that. Observe the currency euro. So if euro is
Mm.
if actual like this is lower than forecast, it is bad. But if actual is greater than forecast, it is good. Please take note of that. Anytime you notice actual is lesser than forecast, it will have a negative effect on the market. But if actual is greater than forecast, it will have positive influence in the market. Now look at this. This is a good example of confluence trading. This right here is a good example of confluence trading. Look at this. I marked out this zone on the daily time frame. I think on the daily time frame, I marked out this zone. Don't worry, we're going to talk about fundamentals. Like I'll pick out a time during the mentorship class to talk about fundamentals or find a way to address it. But you guys can actually read about fundamentals. You guys should please read about it. So I marked out this zone in the course of the trading. I marked out this zone because this was the lowest point the market got to. So I marked out this zone. Number two, when I also drew out the trend line, the daily time frame trend line, and I realized that okay, that zone, I drew the trend line, and I discovered that the zone to this line is actually it got to the this support or this demand zone actually crossed this trend line. It crossed this uh, dynamic support. So look at it on the lower time frame. 1 hour, look at it. So when the market was getting here, I was so certain I was going to buy because number one, the trend line dynamic support shows that it's going to buy. This fixed support shows that when it gets here, it's going to respect it. That was one. That was two reasons. But the third reason is I was using what they call week off schematics. Now week off schematics. Okay, let me go to 4 hours time. That will be. I'll talk about week off schematics later. But I'm giving you guys materials. Have you guys started reading those materials?
Hmm.
Week off schematics.
Yes.
Okay.
Uh,
But if you take a while to understand week off, you need to study week off on its own. Like you gotta look for materials on week off. Now, this phase A, that's fulfilled phase A, that's fulfilled phase B. Definitely, it has to respect the rest and eat here. Then finally, break out of this one and keep going up. Do you understand? So this is all based on principles. And if you look at the daily time frame, man, like as in this thing is very interesting. If you study, please, if you study, you're going to enjoy it. Now, if you look at the daily time frame, this is a retracement. Like I told you, this is a corrective move. And it's actually working in a channel. It's really working in this channel, this wedge, this trend line. It's working in the trend line channel. And this is a retracement. And I always tell you, a corrective move on a higher time frame, it's always from a channel on a normal time frame. You know, look at it. It formed the wake up schematics, a distribution schematics, sorry, an accumulation schematics, and it's going according. So these are like I had like 4 reasons to take this trade here. And look at it. I took it, and this is even where it's still going to. It's still going to get it. So that's like how many pips from now from here to this place. Like how many pips? Like 772 pips. Now, but don't get me wrong. Before it gets here, it will respect these zones. It will respect these zones. It might take it a week to get here, but it's going to get here. So in between getting there, it will come here, it will break this zone to retest, it will come back up, break this zone to retest. It might come back to form a consolidation, break the consolidation, come back here, break here, retest. So it will just play out. It will form impulsive, corrective, impulsive move while getting there. But definitely to get here. So I had number one reason, fixed line, fixed support. Number two, horizon dynamic support. Number three, it is following my week of schematic. So I had so many reasons to take this trade. So many reasons. So many reasons. And let me show you something on the daily time frame too. That is if you need more confirmations to take the trade. Just let me draw out my Fibonacci from this place to this place. Because this is one major move. Let's say from here, this place. Look at this. That zone on the daily time frame is a 50 Fibonacci level. 50. So this is my third reason for taking it. My third reason. Look at it. I used this because this was a corrective move. And I used it, this upspring in this place. And look at the confluence with the 50 Fibonacci level. Look at it. This is the third reason or the fourth, fifth reason to take the trade. That's why it is going to go up. Seriously going to go up. So that is confluence trading. Taking a trade based on more than one reasons. So we can keep going on. Let me show you something to happen on USD Look at USD too. Same thing. Look at. But this is distribution. This is distribution schematics. This is week off. I also use week off here. Man, we all have a lot to learn, but that's why I don't want to talk. I don't really want to talk about week off and this thing because this thing can conflict with the retail knowledge that we have right now, and I don't want it to conflict. I want us to absorb retail trading first. Once we have absorbed it, trust me, everything is going to be bliss from here. Bliss, like it's going to be blissful. It's going to be blissful. So please, I want us to absorb retail trading. Please let's go back and watch everything we've been taught from the beginning. Watch it again and back test. Now look at this. Look at this. This is okay. Let me not talk about week off right now. But I said it was going to go up. Look at, and it did, and it went up to eat this what do you call it? What do you call it? This uptrust after distribution, and then it's going to come down, and finally come down. So this one I took this trade based on week off schematics, and I think I used lower because I noticed that okay, on a 4 hours time frame, it was already consolidating, right? Remember what I said, if the market is going to change trend directly, it's going to consolidate for a while. And look at it, has been consolidating since when? since March 9 has been consolidating, moving in the channel, going up, coming down, going up till they broke out of it. And definitely that will break out of it because schematics, there's a schematic, there's a principle, and this is an institutional move. It's respecting an institutional principle. So, but let's forget this one for now, and let's take confluence trading into consideration. Please, let's take everything I told you guys about confluence trading, taking a trade based on more than one reason. I think let me go to uh, GBP to show you guys trades I've been taking on GBP Or look at this now. Let's assume okay, let's assume right now I drew a line here as my major resistance or major supply zone because this is the highest place it got to. And when it got to what happened, it created a candlestick. And this is an evening star. And it came down, created a lower low, or it could be an higher low. Then here it formed a lower low. And at this zone again, it's also forming an evening star. Let me go to GBP. Yeah, this was a particular trade that I took it based on retail trading knowledge. I drew out my trend line. I drew out my my support. And this is that the market has this is the highest point the market has gotten to. So I drew my trend line. So I was thinking it was going to break here. I'm going to and go back to its dynamic resistance. But what happened? It broke it to the downside. When it broke it to the downside, it came back, retested it here, and I entered after the retest. And what happened? Came down. So I chose to this trade based on two principles. Number one, here. Let me see. I took the trade here first. Then I was hoping it would go up here. And suddenly, when it created double top. Went here, eat here the first time, came back, went back to eat here the first time, and then said, oh, this is double top. That means it's gonna come down. And as it was coming down, that is the first reason why I took this downtrend. It was I need to create double top here at the resistance level, as at the supply zone. Then it came here, broke this trend line, came back to retest it, and this is the second reason why I took it. So I took it based on two reasons here. Just took a double top and break of structure. But I think before I took the downtrend, I bought it from here. Look at it was eating this dynamic. Look at this line here. Look at this resistance here. Look at three reasons why I should take a trade. That is four reasons. The first reason was look at the first reason. We draw out our zone here. This is our demand zone, right? Demand or support. We drew out the zone here. Number two, we already drew our trend line before now. We drew our trend line before now. So we already marked out the trend line. We marked out this support. So when the market was actually coming down, we got here. We went to eat here. There was a strong rejection. That means he hit here and it almost hit this demand zone. That means two zones, hitting two. This is dynamic demand zone and fixed demand zone. That means it's hitting two demand zones, meaning buyers presence will be stronger here. We went up. Number three, 200 EMA is serving as support here. Definitely, look at the rejection when it comes to 200 EMA zone. This is three reasons why to sell. Number four reason, we formed the candlestick formation, which is number one, we formed hammer at the support at the demand zone. Number two, we formed morning star candlestick formation. Please tell me why won't it buy? Even if it's just for a while, look at it bought from here to this place. This is over 177 pips. Please tell me why won't it buy? This is four reasons why it will buy. Four reasons. This is the surest buy you can ever take in the market. So sure. Four reasons. Four reasons. So that's confidence trading, taking it based on several more than one reasons. Please don't take a trade based on one reason. Take it based on several reasons. Take it based on several reasons and take it based on what you've been learning. Please go back and watch everything you've been teaching from the onset. So the class will time out in 3 minutes. So if you have any question, ask now. Hello, if you have any question, please ask.
Not for now.
Okay, not for now. So
Don't forget about the forex factory.
Yes. Oh, thank you. So this okay. Look at it here. It's already on my. Look at it. Forexfactory.com. This is forexfactory.com. Look at it here. As you click on it, it will bring you straight here to market. You click on market or calendars, and to bring you currency and impact. So if you see a red, if it's the news has red file behind it, just know that it's a very volatile news. If it is yellow, it's not really volatile. It's just a random news. That is a weak news. That means it will have little impact to the market. If it's red, it will have major impact. And if it's orange, it will have strong impact. Do you understand? Yellow is weak, orange is strong, red is major. And it's the same principle. If low what are they calling it? If actual is lower than forecast, it is bad. If actual is greater than forecast, it is good. Look at this, actual here is greater than forecast, which is good. Yeah, actual is lower than forecast, bad. Actual lower than forecast, bad. So anytime it's lower than forecast, it is bad. And look at JPY. Look at JPY has been JPY has been weak. That's why GPP went up. Let me show you that JPY trend again. USD JPY too. JPY is weak. US went up. Can you see what I'm talking about? The news is also one conference showing that okay, that means major news that JPY news that can affect the market is actually the fundamentals we're showing is lower than the forecast, meaning to have a negative effect on JPY currency pairs. So you look at JPY pairs compared to other currency pairs. So we based on other technical reasons, enter your market, enter your entry point. So that's how it works. Fundamentals are not really hard. You don't need to know the technical aspects, CCPY, GPDP, just know actual and forecast. If it's lower than actual, it's bad. If it's higher than forecast, it's good. So that's it, everybody. Class will time out now. See you guys later.
Sorry. Hello?
So time out now.
It's
time out
like
now.
that now. Okay.
Join again.